right, so in this video, we are going to break down exactly what it is that Liquidity Lounge trades, okay? We are futures market traders, okay? Futures markets is going to be your ES, which is going to follow the S&P 500, NQ, which is going to follow the NASDAQ, and then YM, although we don't really trade YM very much, we do refer to it time to time, and YM is going to be US 30 or the Dow. So, what is a futures contract? A futures contract is a legally binding agreement to buy or sell an asset at a predetermined price on a specific future date. So you're not buying the asset itself, you're trading the contract tied to its place. So essentially it's like options trading. If you're familiar with options, you know, you're buying, you're selling, you got calls, you got puts. So an analogy that we use is the farmer locks in a selling price in January for July delivery, certainty over uncertainty. Okay, the baker then locks in a buying price and protects against the wheat price spikes within months away. And then here's where we sit as US traders. We jump in the middle with no interest in the wheat, and we profit from the price moving in our predetermined direction. Who's in these markets? You have hedgers and speculators. So the hedgers are going to be institutions, corporations, producers. They use futures to protect against price swings, not to profit from them. An example of that is an airline buying oil futures today so that price spike in 6 months doesn't crush their margins. The speculators are traders like you and me. Okay, we have zero interest in taking delivery. We're here to read price, anticipate movement, and profit. Our edge is ICT concepts, which you should have seen in your training videos. The inversion fair value gap model, which is our model that we use, and how it applies to ES, NQ, or YM. So why do we trade futures over stocks? First and foremost, it's just simply leverage, right? Control large notional value with less capital. One ES contract is $50 per S&P price. So $50 per, if S&P is at 75.01, if it goes up to 75.02, we're up $50 if we're in a long position, okay? If price is at 75.01 and we take a long position and it goes up to 75.10, that's 9 points, 9 times 50, we're up $450, okay? Hope that makes sense. With NQ, one contract is $20, so you can do the math for that as well. The futures markets are 23 hours a day, okay? The only hour of the day that they are not open is between 5 p.m. Eastern Time and 6 p.m. Eastern Time, okay? The New York Stock Exchange closes at 4 p.m. There is an extra hour after the New York Stock Exchange closes. For instance, that's when a lot of your earnings calls will happen. So the markets will still move during that 4 to 5 p.m. area, especially during earning calls, okay? And then it opens back up at 6 p.m., runs all the way through the night. That's where we get our Asia session, our London session, that goes through the night. And then the market closes for the week on Fridays at 5 p.m., and then we'll open again on Sunday at 6 p.m., okay? There is no PDT rule. For those who are familiar with the PDT rule, they've actually gone away with that now. Even in the U.S., the New York Stock Exchange, there is no PDT rule, so that doesn't really apply at all anymore anyway. But if you're not familiar, there used to be a PDT rule, which is the pattern day trader rule, where you would need at least $25,000 to begin day trading. If not, if you didn't have $25,000, you were limited to only 3 intraday trades on a 7-day period. What is it that we trade? Again, these are things that we talked about just a minute ago. The ES is the E-mini S&P 500, which tracks the S&P 500. NQ is the E-mini NASDAQ 100, tracks the NASDAQ. And YM is E-mini Dow Jones, tracks the Dow Jones. Okay, here's the price per point. ES is $50 per point. We just talked about that. The E-mini is going to be $20 per point. We just talked about that. And again, we don't really trade YM. We just use it as confluences and SMTs for these, but it's $5 per point for that one as well.